Okay, everybody, it's me, Gregory Mannarino. It is Tuesday, March 15th, 2022. Where to start? How about this? I'm laughing. I can't help myself from freaking laughing, but it's really pathetic. So, we understand the situation. We have surging inflation with no end in sight. Well, the producer price index this morning shows that in February, wholesale inflation gained 0.8%. Okay, that in itself is substantial, but year over year, we have a 10% gain. Again, no end in sight. It's kind of an interesting phenomenon, people, and it just really gets under my skin that nobody here is going to be held to account for this. The lies, the propaganda, the distractions, the deceptions right out of the mouth of virtually every single Fed president. Imagine Greg Mannarino's shock. Anyway, with that said, let's look over at this market here. The 10-year yield, 2.10 as I am doing this video blog this morning. What does this tell you and me? Well, tomorrow we're going to hear from the Fed, and the rate hike is 100% priced in. The dollar this morning is a little lower as well. The market is not only expecting a rate hike, but it wants it. And again, I really believe the market's going to respond in a positive way. Let's see how that plays out. Anyway, it's going to be interesting. What else is going on? Commodities are getting hit again on all kinds of speculation that possibly, maybe, talks between Russia and Ukraine are going to be somehow a miraculous end to this war. How about no? What they're doing is exactly what you and I would have expected them to do. They're going to use every tactic imaginable to prolong the war. That's it. So these wild swings in commodity prices, we got crude oil right now around 96, WTI about $96 a barrel. Gold and silver are getting hit despite the fact that the relative strength of the dollar is lower. Yesterday, gold and silver got hit again. I mean, look, this is just all a game, and you know that. And they're playing a game with everybody over here. This is nothing but a delay tactic, a mechanism to prolong the war. Russia is not going to stop until they achieve their goals. I think you and I are well aware of that. Anyway, on the back of all this, like I said, the 10-year yield above 2%, no surprise to you or I. I've explained to you for a while that's where it's going to settle. We'll see what happens moving forward. Could definitely come down below 2% if, let's say, a miraculous event occurs where, well, I wouldn't say miraculous, but some kind of a hideous event occurs where they use some kind of weapon of mass destruction over there. They're already setting the groundwork, and you know that. It's pretty obvious to me. Anyway, don't be surprised if it happens. Just remember that, they've already set it all up. So, with that said, like I said, market's looking okay. Stock futures are higher. The fly in the ointment here, crude oil. Okay, we'll see what games they're going to play with that. I would not be surprised, at least in the short run, to see energy and crude commodities fall. Maybe even a lot more from here, but a big rebound is in the cards. Again, we have surging inflation, a dying dollar by design, and commodities are priced in dollars. You got it? I think you got it. Anyway, so that's really the story this morning. Nothing extraordinary going on here. I mean, other than inflation, wholesale inflation here, higher in 1 month by nearly 1% and 10% in a year. I don't know about you, but doesn't that make you freaking sick that nobody's being held to account for this? Nobody will be held to account for this. And there's all this talk about a Russian debt default. I already covered this. It looks like a lot of you are again pointing your fingers at a black swan. You can't do that. By definition, a black swan event is something no one sees. So if you can point your finger at an event, oh, this is going to be it, then that's not it. I mean, I understand, again, that there are probably YouTubers or YouTube channels trying to point at the Russian debt default, which I think is more than likely going to happen. And the market's pricing that in too. You have to understand, if the market sees something coming down the pike, it prices it in. It's not going to affect anything, in my view. So just ignore anyone trying to tell you different, people, because, look, we've seen this before repeatedly with the month after month, week after week calls for market crashes, which just don't materialize. And, you know, a lot of these YouTubers are really trying to, I don't know what they're trying to do to you. I really don't. Mislead you, just like the mainstream is, having you look here when you should be looking in another direction. Anyway, that really bothers me. So forget the Russian debt default as any kind of a black swan, because it's not. Because you can point your finger at it. Anyway, so look, the big story is tomorrow. All this, from now until tomorrow, is just whatever it's going to be. Because tomorrow we're going to hear from the public enemy, and in my view, again, they're going to raise rates. 25 basis points, maybe 50, but I doubt it. And then we're going to hear from the thing himself, whatever's going to come out of his pie hole. And that is going to move the markets as well. All right, people, look, that's it this morning. I've set the stage for you. We got stock futures higher. We got commodities getting slammed. Whatever. We got the 10-year yield here looking good. Weaker dollar. All right, let's just watch the shit show play out. And look for more delay tactics. Again, you're going to hear from the mainstream media all kinds of misinformation. The Russian army is stalled. Talks are going on. This is all a tactic to prolong the war, to prolong a crisis. Every crisis must be prolonged so they can throw more cash at it. They have more reasons to borrow from the future. That's what it's all about, and you know it. All right, you see this guy? He loves you a lot, and I mean that. I'll keep you on top of all this. I'll see all of you at the end of the day, and it's going to be just as lovely as it always is. I'll see you.